Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day street. Well, it's not panning out to be a great session. You can actually see a 200 point of a cut, and over that now 220 odd points of a cut on the Nifty. 24,745 is where we are at. So we tested 24,900, 24,800 on the downside, and we have now tested 24,750 on the downside as well. When we look at the markets among sectors, all the sectors barring FMCG are actually lower in trade today. Sharp losses can actually be seen on real estate, which is now down by about 2%. Even the broader markets are feeling the pinch. You can see the small caps underperforming the broader ones with a huge margin, over 1.8% of a fall for the small cap index today. PSU banks, consumer durables, pharma, they are also seeing some cuts across the board. On the Nifty, there are a handful of the stocks that are still holding up. Eicher Motors is one, about 3% higher. HUL, Nestle, Maruti Suzuki is also hovering higher in trade. ITC, you can also see some IT names like TCS or an Infosys, for instance, that's still holding up into the green. In the F&O space also, it's the FMCG stocks rather that are holding up. So you can see a Britannia, for instance, that hovering higher. HUL, that's also up and about in trade. On the downside, however, today you see Vodafone Idea now down by nearly 9.5%. PG Electroplast is also lower. KFin Technologies, those are some of the other stocks that are dragging in the F&O trade session as well. Let's look at welcoming our guest on board. Mr. Avinash Gorakshakar is now joining in on the program with us to share with us his views on the markets and, of course, a strategy that we should be adopting because we have a truncated holiday tomorrow, and of course, we will also see the impact of the additional 25% tariffs. Warm welcome, good afternoon to you, Avinash ji. Good to have you with us. We'll start off by taking first your view on how the markets are under pressure after some days of bright moves that we have seen. Is this in anticipation of the 25% additional tariffs that we are going to be seeing put tomorrow?
Yeah, good afternoon, Sakshi. See, my sense is that this was on expected lines. I think the market was going to get some jitters, before the final event. I think there were some, reports that possibly, the markets were looking forward for some sort of solution before the August 27 deadline. But I think even if it does come in, I think, one thing is very clear. Our Prime Minister has made it very clear that we are not going to bow down to any kind of pressure tactics from the US. And I think the markets would definitely take a beating in the short term, but the longer term structural story remains to be quite solid. We are an emerging market, I think a very large consumption driven economy. So I think in the near term, I think the Nifty falling by 200 points today is something which is not completely unexpected. It was on expected lines. But I think, sectors like construction, sectors like capital goods, auto components, domestic companies which operate in the housing finance space, typically, I think, wherever the companies are operating in the domestic market, I think these are the companies now which one has to keep on the radar. Our favorable sectors as of now are, sectors like, consumption, FMCG, sectors like housing finance, typically monsoon driven sectors like agrochemicals, and obviously, hotels and tourism. So, there is a wide choice available now. Investors who want to actually take a longer term call should use the weakness as an opportunity. I think in the short term, the panic will continue for some time, but things will settle down. And I think, maybe for another 2 to 3 months, there could be a little bit of problem for the exporters, but eventually even they will find, new markets for themselves. But in the short term, yes, there will be some amount of margin pressure for companies, from the gems and jewelry space, from the textile space, where I think the maximum hit is going to come.
Absolutely. Also, just wanted to get a broader sense for the investors to know how will the markets really react after tomorrow. We are breaking for a holiday on Ganesh Chaturthi tomorrow, and once the tariffs are implemented, will we see continued, knee-jerk reaction on the downside even when we open back on, on Thursday as well, beyond this 1% cut, or do you think most of the negatives are already priced in?
No, I think see markets have more or less discounted the tariffs now, but eventually I think 24,500 on the Nifty Sakshi is very important. I think unless we hold to that level, because I think now crossing 25,000 in the very near term is a challenge on the upside. But on the downside, I'm pretty hopeful that 24,500 will be a very strong support level. Today we are around 24,700. So I think hopefully if the market corrects, I think 24,500 will be a strong support level investors should watch out. And beyond that, I think if there is a correction, then I think we could see a continued trend of selling. But I don't think this can happen. there is a lot of liquidity in the markets, from domestic funds. And I think a lot of selective buying is also happening. So I think clearly once 24,500, if at all it comes in the very near term, markets would definitely get a little bit of bounce back from buying from the domestic funds, as well as a lot of good HNI investors. So there's nothing to worry. But yes, in the near term, markets will continue to be volatile. I think till the time the Indian government also does not announce any big solutions to take care of the Indian exporters, I think the markets will be little jittery.
Okay. Also wanted to just get a sense on the strategy that you think investors must adopt. When they open up on Thursday, it will be the weekly as well as the monthly expiry as well. This month again has been, bogged down by a lot of negative news flows on tariffs, but we've also seen some good news on the domestic front as far as GST is concerned. So, how will this expiry turn out to be? What would you advise clients?
No, I think we have been telling our clients that use the current weakness to actually add positions in good companies, because these things are not within anybody's control. What happens on the tariff side is completely uncontrollable. So I think the Indian government is also making all sorts of efforts, to ensure that the domestic industry is protected. So our sense is that companies from the hospitality space, hospital space, companies from the engineering capital goods space, I think these are companies where if you get a decent fall in the current market sentiment, I think one has to take that contra call and actually add to positions, because you get companies at the right valuations at your prices when the market sentiment is weak. And as soon as the sentiment gets better, I think the market sees a good bounce back. So my sense is that hopefully post September the results are also going to be better, and with the GST cuts likely to be introduced, sectors like auto components, insurance companies, or for that reason FMCG companies, you could see a lot of bounce back coming in. So markets will wait for some time till the quarterly numbers post September don't come in. But this is a good time to accumulate and add positions slowly, because structurally the Indian markets are definitely going to go up. I don't think the Trump factor is going to actually derail the entire growth story for India.
Fair point. Let's also discuss some of the other moving parts, sectoral moves, stocks move that will be important for us to track in the markets today. Today, there's also going to be another important event, Avnashji, and that's the MSCI rebalancing. Four stocks are going to be clearly in focus there. We have the food delivery aggregator Swiggy, Vishal Mega Mart, Vari Energies, as well as Hitachi Energy India, which will be in the list of inclusions from the Indian market there. What kind of flows do you anticipate for these key stocks? You can actually see a sharp momentum on these particular stocks today. About 2% uptick for Hitachi, a spike there. Vishal Mega Mart about 5% higher in trade. Swiggy, there's a move. Vari Energy is also 3.5% higher. What kind of flows do you anticipate? Brokerage houses are also penciling in somewhere about $56 million to $1 billion kind of a move that could be coming in. Do you think there could be further upside because of this inclusion in these stocks? Which one is more favorite of yours?
No, I think within this basket, I think stocks like Vari Energy and Vishal Mega Mart, I think these are companies which I think will do well, because even as of now, the sectoral tailwinds for the solar energy space is very strong. Most of the companies are sitting on a very strong order book, specifically if we talk about Vari. And as far as Vishal Mega Mart is concerned, I think the GST cut which will come in, which will actually benefit their customer clientele, because they come in that food category where possibly the GST could not be more than say 5%. So I think to that extent, I think Vishal Mega Mart looks pretty attractive. I think from a longer term perspective, this is one company which operates in the tier 2, tier 3 kind of markets. So clearly, I think one needs to be a little patient. I think rather than buying the stock on the circuit today, it's better that you keep it on your radar, and whenever you get a decent moderate correction, I think you can add positions here. But yes, I think this move by MSCI is clearly considering the fact that they believe in the fundamental of these companies, and I think that's why these companies are getting included in this index. So maybe the sentiment may be a little bad, but ultimately they are looking at value from the core business. So I think investors should also follow the same example, take a slightly medium to longer term call here and stay invested.
Okay, stay invested there. Another stock, since we're talking about the retail space, is D-Mart or Avenue Supermarts that I wanted to discuss with you. Now, we do know that over the last 1.5, 2 years, or there's been some kind of consolidation on this stock. Some pressures have also built up on the stock price as well. There was heightened competition from these new age companies that are betting big on e-commerce and e-tail, for instance, while D-Mart's own strength lied mostly in the offline presence where it gave competitive prices. Its same-store sales growth have been exceedingly good in the past as well. Today, interestingly, we have seen CLSA come out with a fresh report with a high conviction outperform rating on Avenue Supermart. They also expect a 35-36% of an upside potential that the stock may have. In the last 1 month, there's been a considerable amount of improvement, about 19-20 odd percent. How would you look at Avenue Supermart? Is it giving you an opportunity for a fresh entry, sir?
See, I think Sakshi, as far as DMart is concerned, I think if you look at the valuations, I think unless the investor has at least a 2 year perspective, the risk reward may not be very great. But yes, from an offline perspective, DMart continues to have an edge because they follow the policy of owning their stores, so rentals for them are pretty less, and most importantly, they tap tier 2, tier 3 markets where the customers actually like to physically go and buy articles. So, maybe the food delivery apps or maybe the other e-commerce companies attract customers from the urban market. So, to that extent, the opportunity for India and for DMart is definitely quite large. The runway is very large because we still don't have that kind of retail presence in our country. So, typically, if somebody has a 2 year kind of plus kind of time frame in mind, one could look at DMart, as a core portfolio kind of addition in the retail space, but keeping a time frame of at least 2 years plus.
Absolutely. Let's dig a little deeper and understand about more key stocks and sectors. You did mention that autos is something that you are looking at closely at this point in time. They've already started to reflect the expectation of a good festive season because of the GST rate cuts. We are anticipating in the first week of September alone the GST Council to approve the newer rate structure as well as lower rates for several of the sectors, including that of the autos. What we are also given to understand is a contradictory story too, and that's that at the dealerships the inquiries for what could be the prices of cars or two-wheelers after the newer rate is coming in, but people are postponing or deferring their own purchases. If somebody had to buy a car or two-wheeler today, that person has decided to wait until 1 or 2 months till the time the final price is coming in, and therefore there could be some pressure of 1.5 odd months into these consumption sectors. How do you anticipate that to be offset with probably a bigger and a better festive season this time than last year?
No, I think this normally it actually happens every time because I think dealers who hold inventories of old products or vehicles definitely have a problem here. But I think most of the OEMs have a long-term relationship with their dealers.
Yeah.
So in any way, I think the dealers will be compensated for the old inventory. And I think what is not purchased now in the next say 1.5 months gets more or less compensated once the price cuts are announced. So I think it's a matter of time. My sense is that this is going to be a very small aberration in the market for most of the OEM companies who sell their products via dealers. So there's nothing wrong and there's nothing worrisome as of now. But yes, maybe you could possibly see the impact of the GST cuts getting reflected in better revenue or maybe better volume growth after September. So till that time, maybe the second quarter sales may not be that great as what was expected earlier. So net, I think in the overall scheme of things, it may not matter. But for 1 quarter, you could see a little bit of flattish or negative kind of sales growth in the second quarter of this financial year.
Okay, fair point. So if I have to ask you, within the two-wheelers or four-wheelers, maybe even the auto parts, where would you feel the maximum benefit of GST will come in, sir, and what should be the pre-position then?
No, I think, see, in case of the OEM players, I think commercial vehicle companies like Ashok Leyland, Tata Motors,
Okay.
these companies will benefit because commercial vehicles now the cycle seems to be turning around, and from 28%, even if they are charged at 18%, it makes a big
Yeah.
difference because pricing is very important for the CV sector. Passenger cars also could benefit, but the medium size cars or maybe the small size cars which come in the luxury bracket, maybe something beyond 20 lakh rupees, may not attract a lower GST. And of course, the two-wheeler market could benefit the most because these are relatively low-priced products companies like Bajaj Auto, Hero Motor, TVS, all of them would benefit. But from the auto component sector, I think we could say that companies like Shriram Pistons, which has got a very large kind of presence across two-wheelers, four-wheelers, tractors, series. I think which supplies original equipment, engine parts to these to all these segments, should also benefit. So I think my guess is if the OEM sales for CVs and passenger car and two-wheelers go up, then obviously companies which are catering to these sectors, the OEMs, will obviously benefit because they will also get a kind of a lower GST, for the component which they are supplying to the OEM. But I think we'll have to wait for a couple of months, Sakshi, before we get these, clarifications from most of the companies.
Fair point. Let me ask you on the FMCG space. That's also, after being a laggard for such a long time, has started to hope that more money in the hands of people by way of GST rate reduction will also increase purchases in the fast-moving consumer goods. Are you bullish on this space? And which are the stocks that you would probably keep as your preferred top 2 or 3 stocks here?
No, I think see, FMCG is a very wide basket, but I think
Yeah.
within the category, something like maybe a Dabur or Marico
Okay.
or even a Britannia, we would prefer maybe companies like Godrej Consumer. Basically there's a wide list, but I think these companies which have got a large domestic base and where which produce products which are of daily necessity, those are items which possibly could get a better hang. Of course, we also have Hindustan Liver, but clearly from a risk reward perspective, I think it's always better to bet on the smaller size companies where I think you could possibly look at a better kind of a risk reward. So net, I think we'll have to wait for September to start and possibly see the third quarter numbers. But my sense is that FMCG is now turning around, a good monsoon, lower interest rates, and rural demand is picking up. So I think must once the second half season starts, you'll probably see a good uptick. But I think it's always a good idea to start an SIP or maybe start nibbling into these companies which I mentioned in a very small way.
Okay, viewers, we've now slipped below 24,700 mark. We're at the low point of the day, 268 points of a cut on the Nifty, a percent and more that you can see as a clear fall coming in. Key stocks that are under pressure are Shriram Finance, Sun Pharma, Bajaj Finance, Tata Steel, Trent, even Reliance Industries, 2% lower at 1382, Bajaj Finserv, Axis Bank, even M&M. So these are some of the heavyweights that are dragging on the Nifty, at least at this point in time. Let's discuss on Reliance Industries, Avinash ji, because that's also going to be in focus on Friday because of the AGM, the 48th AGM of the company as well. This time again, the hopes are that there could be some signs on the IPO as far as Geo or a retail is concerned. We've also right ahead of this AGM seen how SEBI has eased out some of the IPO rules there to probably benefit large IPOs that could be coming in future. What's your own expectation from Reliance Industries AGM this time around? Can it catapult the stock into a higher trajectory?
No, I think Reliance AGMs are always special because the management makes it a point to highlight a lot of achievements and make some big announcements. And this is the 50th Reliance AGM, so I think some good news could come in. I think the markets are expecting many good things, but I think out of that, maybe the retail business is something which is being talked about by the markets for a very long time. That value unlocking could come in. Plus, what kind of trajectory Geofinance has done? What are the kind of plans for Geofinance? Because this is also one company which has been in the limelight for a very long time. So I think what they do on the mutual fund side of the business, on the broking side of the business, will be clearly, possibly told by the management as of at the AGM. So I think net, I think we'll have to keep our fingers crossed. But yes, I think any positive announcement on any of these factors which I mentioned could possibly, at least give a bigger kind of a push to the stock. So I think we have to wait. But I think definitely some positive news could be announced at the, Reliance AGM.
Okay, fair point. It's 3:20, just about 10 minutes to go for the markets to shut shop today, right ahead of the holiday. Avinashi, any fresh stock ideas that you may have come up for your clients of late, after the GST announcements have been in place or, after the end of Q1 as well? Any key stocks that you could highlight?
No, I think within the large cap space, we continue to be positive on the defense side. I think, companies like Bharat Electronics, Hindustan
Okay.
Aeronautics could definitely be considered. My sense is, here the investor should not look at the stock from a pure target price oriented, but add them to their portfolio because these are stocks where the next 2 to 3 years are going to be very solid. And secondly, from the travel hospitality space, we like companies like BLS International. Our sense is that, this is a very niche business in the visa business, which they are number one in India. And I think profitability is very rock solid. It's a cash free business. So here also, I think if somebody were to hold for the next, say, 12, 18 months, we could easily look at a price target of 470, 480. So, these are good profit generating companies, but since the sentiment is low, you're not seeing any major traction here. So I think defense and maybe hospitality could be sectors where, that offer a pretty good amount of comfort at this point of time.
Fair point. I hope viewers you've noted that down as well as far as the key stock ideas are concerned. Let me bring up some of the other key stocks in sectors for you. The large heavyweight sectors is what I will come to next. Banking space, financial services, housing finance companies. Let's discuss all of that. Again, it's the festive season. We are hoping for a large part of the money to go into cars, two-wheelers and consumer durables. All of this is largely nowadays finance. So do you believe, there could be a higher credit growth cycle that we could be looking at, that the banks, financial services space could be benefiting?
No, exactly. See, I think this time, I think my sense is that rural demand is going to be very rock solid. Plus,
Okay.
with interest rates down, a lot of NBFCs like Bajaj Finance, Poonawalla Finance, or maybe the commercial, banks, both from the private and the public sector, will benefit. But I think we need to wait for some time. See, two rate cuts have happened, Sakshi, but the transmission effect has been very slow. So I think, we need to also see that coming in. But yes, credit growth again inching up to, double digit will take some time, maybe another quarter or so. But hopefully post September, I think we could see a better picture because private capex is also going on pretty well. The government is also going to spend a lot of money on infrastructure. So all that actually means that there's a lot of funding requirement which is going to be required from the banks. So we are positive on the private banks, something like an ICICI Bank or an Axis Bank, even from the public sector, something like a Bank of Baroda or maybe a Canara Bank. But I think you need to give a slightly longer term time frame. I think, we would see the stocks getting re-rated over the next, say, 12 to 15 months. Maybe the next quarter, July to September could be a pickup quarter, but second half is expected to be much better, hopefully.
Okay, second half could be a much better one, hopefully as well. Let me also ask you on the key sectors that we anticipate there could be a knee-jerk reaction, with respect to the exports thereof, textiles, for instance, fertilizers, chemicals. How are you looking at these smaller spaces, sub-sectors that have been so far showing us a movement every time there is a negative headline on export tariffs?
No, I think, I think if this tariff of 50% continues, then I think most of the exporters from India will have to stop their exports because at these tariff levels, it may not be sustainable for them. And now the big question is who actually takes the tariff burden, whether it is the customer or whether it is the producer. I think in most cases, wherever the product is very critical, I think something like a pharma or a IT, I think that is not going to make a big dent, from the tariff side. But whatever is a discretionary kind of a customer decision, I think that is going to suffer. And in the near term, sectors like gems and jewelry, textiles, or for that reason chemicals, there could be a knee-jerk correction in these sectors and these companies because the markets would definitely like what kind of support the government provides, and that will definitely come in. But that will take some time to compensate for the loss, which the tariff has brought in. So I think in the near term, investors should be little wary. I think there's no need to hurry and buy these sectors because clearly you'll probably see these stocks coming down and you'll get a good entry point at a later stage.
Right. Let me also ask you, to help us understand on IT, what's your fresh view? We've seen, of course, a washout of a quarter, a disappointing quarter this time around. The stock prices have also reflected, muted or negative trade right after. But do you think this is somehow getting into an oversold, over bearish kind of a space? Will it give you a contrarian opportunity to enter at this point?
See, I think my guess is most of the IT companies, the tier two companies are definitely well poised because the larger IT companies, because of their overheads and because of their cost pressures, have a very
Mm.
difficult problem. We have seen
Hmm.
TCS cutting their employee size. I think if you look at smaller companies like KPIT, Persistent, Mastech, my sense is that companies which are having now a SaaS model or maybe something on artificial intelligence or machine learning, that is where they could stand out in a competitive kind of industry as of now. So my sense is, wait for the September quarter, the third quarter to come out, because as of now, we have not got any signals from any US large companies where the order book has increased significantly. A lot of orders have got clogged, and I think even customers in the US are waiting very cautiously what happens, post the tariff era. But I think clearly IT is a very critical sector for the US. It won't be that these companies would be taxed heavily, because a lot of US clients or US companies depend on IT vendors. So my sense is, yes, it's a good sweet zone to buy. But if you are looking at investing in these companies, then I think you need to give at least 12 to 15 months time frame. In the very near term, maybe for the next 1 or 2 quarters, there is nothing which is going to trigger a big upside in these companies.
Right. Towards the end, Avinash ji, please help us understand on the IPO space and the newly listed companies. Has anything caught your attention? I mean, today at least 4 of them got listed. We saw Vikram Solar, Shriji Shipping, Patel Retail, all of them, trading higher with gains on day one of their debut. We've seen 2 more IPOs open up today. Vikran Engineering, which is Ashish Kacholia backed IPO, that's also sailed through on day one. We also have Anion Healthcare, but both of these IPOs are also attractively priced, under 100 rupee kind of an IPO price is what we have, issue price that we have, price band. How would you look at the opportunities in the newly listed and primary market space?
No, I think, see, the kind of supply of paper, Sakshi, which is coming out actually creates a little bit of an issue, because we are seeing ample amount of supply of paper coming both from the main board and the SME companies. So I think companies are definitely good, but if somebody wants to put money on the IPO market, I think he's got to give a slightly longer term kind of time frame, because investors who apply for IPOs only for listing gains, I think that is not going to yield any big rewards. So I think despite the fact that these IPOs today opened in the positive, my sense is that unless you got a 12 to 18-month time frame, markets would obviously like to judge these companies on their financials, on the management commentary going forward. So I think only those investors can apply. Vikran Engineering looks pretty good. I think that can definitely be considered if one looks at the longer term picture. But otherwise, it's always better to wait for the new issue to get listed and settle down. And once that happens, I think it's a wise decision to then buy it from the secondary market.
Okay, fair point. All right, Avinash, thank you so much for your time and helping us understand and navigating through all these market moves and opportunities there. Always a pleasure to host you. Hope you have a great Ganesh Chaturthi, and we'll see you on the other side in the markets too. All right, viewers, let's start wrapping up the closing edition of D Street. 24,700. It could be either above or below. We are just toggling around that level. 263, 265 points now lower in trade. We are at the low point of the day, a percent lower. So we go into Ganesh Chaturthi with some losses at this point in time, with the hopes that Ganesh Chaturthi will see the blessings of Lord Ganesha come back on the D Street, and we start off again on a positive note. Let's look at what's happened today, because this is largely to do with the tariff-led nervousness that's spilled over across the board on D Street today. Large caps, mid caps, small caps, sectoral action, everything is seeing profit booking completely. FMCGs emerged as a safe space, defensive space that stepped up with almost a percent gains despite 3% uptick on India Wix today. Even some auto stocks that have stepped up, IT names, some of them have also climbed in trade. Eicher continues to be the top mover. HUL, Maruti, ITC among the top movers. Britannia, Eicher and HUL again among the top movers on the Nifty FNO series. Let's look at 500 basket. LG Rubber is up by 18%. Patel Retail, today's debut stock, 13% higher. Ratan India Enterprises is up by 10% at 58.48. Remember, we discussed this one and a strategy on this stock in the 12 o'clock show today. Andhra Cements, Edelweiss Financial Services is up 9% in trade. Protein eGov, we had also discussed this one right in the morning trade, because there's big news flow from UIDI, order flow behind this stock, so 8% higher. Vikram Solar, today's day one debut, 7 to 8% higher in trade. You have SH Kelkar that's up. Wari Energies is higher by 5%. The trigger is MSCI inclusion and therefore the anticipated inflows there. Electrotherm, many such stocks that are hovering higher in trade. Gujarat Apollo Industries is another one that's also hovering up. All right, 330, 24,710. Managed to pull up above 24,700 mark towards the end of the session today. 257 points higher in trade. That's how we, 257 points lower in trade. That's how we shut shop in trade today on the lower end, just off that lowest point mark, if we may say so. And let's hope that when we open up after a holiday tomorrow, we have some more reasons to cheer in the markets as well. With that, viewers, we wrap it up on Markets Today, but do stay tuned on to Business Today television. Beyond the market coverage, news coverage will continue from the world of business and finance.
Gentlemen, again, a very warm welcome to you on Business Today television. We are smack in the middle of the week on Tuesday.